All right. Hey, happy Tuesday, everybody. So, what a day, especially for the cryptos. When we opened up this morning, man, wow, crypto was under 30,000. People were saying it's the end of the world. Kramer said he's sold all his. We were watching some YouTube videos where people were crying in their coffee and stuff. And here we are, 8 short hours later, and it's back at 33,000. So interesting movement there. That's why I always tell you guys, especially with something as volatile as Bitcoin, gang, you have to be patient and you have to be able to sit through some petulance. We talked about it with oil on Friday, right? Oil, along with the markets, right? Oil got a little beat up and people were to get out of the oil trade. And I said, no, 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 no. And you see oil's pushing 70. It actually took over 73. It's been holding 73 pretty much all day. And it looks like it's about to make that move to 75. Stock of the week, guys. Look, there is a bad moon arising, and I'm going to talk about it over the next rest of the week. But the stock of the week, it's time now that we want to start putting at least maybe 2 or 3 pieces in our portfolios, everyone, that are a little defensive and are going to take advantage of maybe a bear market or something like that. So we will release that tomorrow about the same time, okay? And you know where to find us. But we'll release that. So I'm going to give it to our members in the morning, and then late afternoon, about an hour left in the market, I'll release it to all you guys, to the public. Like I said, there's a bad moon arising, guys. We're starting to see the first signs of gridlock in Congress. The flagship policy, of course, is the election reform, and it looks like that's going to stall. And I think that's pretty much an indicator of what's going to happen when we get around to mid-July, when they start trying to pass infrastructure bills and stuff like that. It looks like as far as Congress goes, it's going to just be stagnation. Everything's just going to stick. Nobody's going to agree on anything, like always. Nobody's willing to compromise. You see what's happening right now. The signs are right there. If the moderate Democrats give too much to the Republicans, the progressive side of the Democrat Party doesn't like it. If the Republicans give too much to one, then they don't like it. If the moderates, if it goes too far left, too far right, they don't like it. Nobody is willing to sit at the table and say, look, let's make sure everybody gets a piece of this pie. It's all about, we want the whole pie or the pie goes in the garbage. And that's where the pie is headed right now. That's as far as politics go. Now, economically, Thursday is going to be a big day. We'll see. We talked about it last time with the unemployment reports, with the labor reports, right? One bad report does not make a trend, but 2 leads to 3 leads to 4. So we'll see how the labor market is doing on Thursday. But for right now, we're just kind of sitting tight. We're still short the Twitter. We think it just did a gap fill. And even though the trade's looking a little ugly right now, it's only, we just opened it up and we've given ourselves about a month on it. And we knew there might be a gap fill, there might not. And there was. So we'll sit tight on that. The oil plays are looking great, right? Especially the Suncor. The Suncor is right back up, pushing 25. MRO just went a little green a few minutes ago. And the ET bounced right back up to that $11, and it's kind of fluctuating right now. Oil is just kind of rocking still. So the consumption, and we got July 4th coming up, and we got that crazy little thing called inflation too, which the Fed says is absolutely manageable, and we're going to see how true that is. Other than that, guys, it's just kind of a mellow day for us. We didn't open any new trades. We didn't close anything out. We're just kind of sitting tight. Bitcoin, like we said, anytime that thing's under that 39,000, if you want to own it, it's the time to own it. This morning was a great buying opportunity if you're looking to get into crypto or looking to add to your positions. And we think underneath that 40, man, let's call it a nice round number, 40,000. It's a nice buy. In fact, let's go pop on over and take a look at the chart. Let me share my screen with you. Let's start with CNBC, gang. Let's get a little refresh here going. You see the Dow's up about 98, almost 100 points. The NASDAQ's up about 90 points. S&P's up 0.5%. Let's go look at Twitter real quick. You can see it's pushing that 64 now. We're fearless, though, guys. Remember what I teach you guys about your trades. Sometimes they'll start out a little rocky. Sometimes they'll start going the wrong way. But unless you're on a short leash, then you don't tap out too quick. Let it kind of face up. This market could open up tomorrow morning down 200 points. And guess what? All of a sudden that trade is down $6, $7 and you're winning again. So let's be patient with this because it's a very volatile market right now, guys. The oil play, let's go take a look at oil. You can see it's holding at $73, which is great. Of course, people in the media and stuff will fixate, oh, it's down 0.75% today. Well, you know, just 2 short weeks ago, it was also $65. And then let's pop on over to gold. Gold is not reacting. Now, there's a theory, and I saw an article about it yesterday that I had forgotten about this theory, but it makes sense and it's played true a lot of times, especially when we had the big sell down back in 08 and stuff. This was a precursor that in a positive environment for gold, it has a huge pullback. That's generally a message from gold to the market that it's about to have a big sell down. So we'll keep our eyes on that right now. Gold is still stuck at about that mid 17s, high 17s. Other than that, it's just been kind of flatlined the last couple of days, but let's keep an eye on that. That's after that big sell down, right? Let's take a look at a 1-year chart, that big sell down there. And that happened on inflation fears. And that's why it kind of makes sense to us that maybe that indicator is coming to fruition. That when gold has a big sell down in a positive gold environment, it's a precursor to maybe a month or two later, the markets will have a massive sell down, 10, 15%. So we'll see. We'll see. Let's pop on over to the crypto world. How about that Bitcoin, huh? Bitcoin's just been crazy. Let's go pop over to our trading view Bitcoin chart. Let me move that handsome guy there. Let's pop on over to our year chart. We don't want to be on the day chart with Bitcoin. There you go. And see how we talked about it, that bottom green line, you know, it gets in here and it's a little, now you're in kind of a danger zone, but if it holds, it'll usually bounce strong and yada, yada, yada. And you kind of see how it had the big sell down, right? It tested that bottom, it bounced back up, it got back into that main channel. This is where we feel the comfort zone is between that 34,000 and the 39.5. That's your comfort zone. You're probably scared out of your wits when it's down here. So you're not emotionally ready to buy. If you are, it's a great opportunity, but wait till it comes back in here and then buy, because that's kind of a stable zone right now. Then if it takes out that 39.5 and holds for a day or two, it's probably back on the bullish trend. But we think we go sideways for a while, maybe another couple weeks, maybe a month. It's just a nice long buying opportunity on Bitcoin right now, and that's the way we're taking it. It's kind of funny. You guys know in the crypto show, the Friday crypto show, we started that little Nexo portfolio with $200. At one point, it was up to $450 through the interest and all that, and swapping coins back and forth between the Bitcoin and the Ethereum, depending on which one was higher and which one was moving. We got it up to that $400 range. When we opened it up this morning, it was at 190. And then I just opened it up a few minutes ago and it's back up to 380. So if you have a weak heart, stay off the Bitcoin. Let's go take a look at an oil chart. Now, remember, this oil chart's delayed. So let's go use that quote. You can see it's kind of flatlined there at about $73. This chart lags it, so we don't use TradingView too much for that. Just for the technicals, we use TradingView. Let's pop on back to CNBC. That's not CNBC. As you can see, we've logged off the trading system for the day. And for good reason, guys. Look, it's Tuesday, okay? We just had that big wash in Bitcoin. The markets are a little chippy. We've got this big vote going on in Washington over the election reform. And that'll kind of dictate how much policy actually gets enacted over the next couple of months. There's a lot of moving parts right now. So we're positioned. We're going to stick with the Twitter for right now. We think there's a sell down coming real quick. We knew when we entered the trade, it might break down right away. We knew it might do a gap fill, but we didn't want to be chasing it if it did go the way we expected it to. So we'll just be patient with this. We're not going to be petulant with that trade. We're in the energy plays, right? The only other plays we got on the table right now, besides the Twitter short, is we told you we bought the PEJ a couple days ago. We bought some options in PEJ, which is the entertainment and travel and leisure Invesco ETF. We like that one going forward to get a little summer love. And of course, we have the MRO, the ET, and the SU calls. And we'll sit like that for a little while here and let some of these work out, right? Just like the Bitcoin, you know what I mean? Look, guys, yeah, you can be like some of these people on YouTube, okay? You can be like them if you want to. Sitting there pounding your head on the table, crying about this. I sold my Bitcoin. You see how easy it is, though, to get through volatility. Just don't do anything. It's that easy, right? Kramer sold all his Bitcoin this morning. What, 29,000? He missed out on $4,000 a coin, just because he didn't stop. So just remember that, guys. It's like I tell the members this morning with Twitter. I know the Twitter play is getting a little ugly because it's pushing up and we're short. If it's bothering you that much, you check your charts. You still believe you're right on your technicals. You believe over the long term this trade's going to be a winner, right? What do? Stop staring at it. Right? So the more you stare at it, the more it's going to freak you out. Anyways, guys, so look, tomorrow afternoon, stock of the week. This is an important one, okay? This is going to be our first defensive play for what we think will be at least through the rest of summer, from the maybe middle of July, at least a bear market. And this will be something we want to add. This doesn't mean we're going to sell anything from the portfolio, from the long-term portfolio. We still keep those stocks. Those are great balance sheets, great dividends. Even in a sideways or a soft market, these things will make you money, right? They'll keep paying you dividends, paying you dividends. The cheaper the stock goes, the more you get in the dividend, right? Right? If you're getting 45 cents a share and the shares are $10, guess what? You're only getting 0.45 shares. But if that share goes down to $7, guess what? Now you've almost doubled your dividend, right? So just remember that, guys. Patience, patience, patience. And I'll see you guys tomorrow about lunchtime for the market update. And then right about maybe an hour left in the market, I'll release the stock of the week. And this is one you're going to want to check out because this is a good one. This is a good one. Okay, guys. All right, guys. I'll see you guys tomorrow. You guys have a great Tuesday.